Hi, everyone. My name is Mo Zulfikar, and welcome to another episode of Income Investors. With me today is John Whitefoot, and we have another exciting dividend play for you. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, there's risk involved. To read more about risk regarding investing, please see the description below. When it comes to high yield stocks, you want to find a company that pays a reliable dividend. It also doesn't hurt to find a company whose share price is also trending higher. There's no point, there's really no point in investing in a high yield stock if the underlying price is tumbling. Chasing yield and expense of your initial capital is one of the ways to rack up huge losses. You're not going to get that with today's income pick. Sabine Royalty Trust is traded on New York Stock Exchange under symbol SBR. If anything, right now, Sabine Royalty Trust is a perfect stock for both income and growth. John, if you want to take away.
Yeah, thanks, Mo. Sabine Royalty Trust is a great stock that's taking advantage of industry tailwinds. Sabine Royalty Trust is an oil and gas company that has royalty and mineral interest in producing an undeveloped oil and gas properties, mostly in the South, states like Florida, Louisiana, Mississippi, New Mexico, Oklahoma, and Texas.
John, let me go back a little bit. Can you explain what royalty income trusts really are? How do they operate?
Yeah, for sure. A royalty income trust is a special kind of equity that lets shareholders invest in income generated from oil wells, gas deposits, coal mines, and other energy producing companies. You'll find most royalty trusts are listed in the United States and Canada. What's important to understand is that with a trust, it has no capital expenses. It just pumps out oil and gas and passes on the royalties to investors. It's basically as simple as that. There's a caveat, of course. As long as the company is operational and is moving products, trust unit holders, receive monthly dividends or quarterly cash distributions based on the royalties paid on those properties. But once a resource is depleted, like an oil well running dry, the trust is dissolved.
Now we have to talk about this because once the reserves dry, the trust dissolves. What kind of reserves does Sabine Royalty have? Is there any risk of the company running out of oil and gas anytime soon?
Yeah, as a royalty trust, the company isn't exploring for or investing in new wells, but it does have undeveloped properties. And the company is really good at updating its reserves for shareholders or investors. As of January 1st, 2023, the trust net proved reserves were appraised at approximately 9.5 million barrels of oil and 47.4 billion cubic feet of gas, with a future net value of approximately $657 million. Though with these estimated quantities, Sabine reserves are expected to last or have a lifespan of 8 to 10 years.
Let's talk about dividends. How do they decide on the dividends, and what kind of distributions are going to happen to the unit holders?
Yeah, like most energy stocks, their dividend or payout is sort of contingent on supply and demand and the price of oil and gas. In May, it declared a monthly dividend of 0.499 per unit, or $8.53 on an annual basis, for a pretty big yield of 11.79%, which again, more than double the inflation rate. And that distribution reflects oil production from February and gas production for January, with production volumes of approximately 58,000 barrels of oil and 926,600 cubic feet of gas. This month's distribution is actually lower than the previous month's payout of 0.699 per unit, but the decrease is primarily a result of decreased production due to the timing of receipts through the end of the month and a decrease in gas pricing. Again, not a big surprise to investors familiar with energy stocks. The distribution for a royalty trust can fluctuate from a month to month and quarterly basis. What is important to note, though, is that despite economic uncertainty, Sabine Royalty did not suspend its monthly dividend payouts during the pandemic. At a time when many oil and gas companies were cutting or suspending their distributions, Sabine Royalty held its payout, and shareholders still received a distribution. And the outlook for Sabine distribution remains solid, with strong demand helping drag oil prices higher. This includes upcoming already cuts, but also we expect upcoming additional cuts from OPEC Plus, which will not only impact near-term oil prices, but eventually those cuts will eliminate any surplus built up since the beginning of the year. The reopening of the Chinese economy should help juice oil and gas prices too.
Let's finally talk about how their unit price is doing.
Yeah. Sabine units are doing exceptionally well. Again, it's a reliable, high-yield monthly dividend stock, but it's even better when it's accompanied with a strong share price, which is what you're getting with Sabine. While it did take a hit during the pandemic, it's been on a tear basically since then. As of today, Sabine Royalty stock is up 14% year over year, 27% over the last 2 years, and 322% since bottoming in March 2020.
All right, John, thank you so much for talking about Sabine Royalty Trust, traded on New York Stock Exchange under symbol SBR. Sabine is one of those dividend play that pays a monthly dividend. Obviously, it fluctuates given the price of oil and gas, but it has been consistent and has been one of the companies that were paying throughout pandemic when other companies were pausing their dividend. That's it for today. We'll be back again with another exciting dividend play in our next video. In the meantime, don't forget to like this video and subscribe to our channel, and we'll see you soon.